All right, well, let's see if this helped. I changed a bunch of settings, so maybe this is going to be better. All right, well, hopefully this is better. Okay, you guys let me know if I did change a bunch of settings. I Googled some stuff really quick. All right, well, yeah, let me know. Hopefully this fixed it. I probably won't restart it again, and hopefully it's watchable. I I Googled some settings that I could change to make the stream run smoother if it's lagging. I have no idea if it will work or not. All right, well, Bitcoin chopping around here in the New York Open. Pretty choppy, grindy range here after a strong impulse. We may not get this sweep of the lows. We'll see. Some aggressive selling coming in locally here. We'll watch order flow. Telling a little bit of a story. 2.6 million positive delta in this 5-minute candle. Retrace 2.6 million negative delta. Some aggressive selling coming into this candle. A little bit of absorption as we're grinding around here. But overall, even in the context of this range, I would say locally, this is a bullish divergence that's relevant locally. The context of the range, CBD is quite neutral, but not going to be surprised to see us push back up towards the highs of the range. But again, nothing major's happened here. Would lead you to think that price is going to tap some liquidity to the upside. Ideally, that would be after taking the lows of the range, but we may not get that set up. But what we might see is we might see some really aggressive selling coming in, getting absorbed. Really high negative delta, that could be a long trigger, or vice versa, some really aggressive longs up here getting absorbed, and that could be a short trigger. Locally. But not particularly interested in trading the middle of the range here. But we could establish all of the relevant levels in our local range as well. Just on the 5-minute chart. Some local highs here. A local GP. Always a level to watch. No. Somebody says, when you talk about aggressive trading, it means you'll risk more or you'll increase the risk. No, I'm just talking about the time frame and triggers, right? Like trading aggressively into an uptrend, let's say. For me, it's not about taking more risk. It's about the time frame and triggers of your trade. So trading aggressively into an uptrend, for example, for a continuation. Versus, like for example, if you wanted to trade this as a range, you could just say, okay, well, I'm interested in shorts up here, and I'm interested in longs down here. But trading some of the low time frame structure more aggressively, lower time frame setups into higher time frame ideas. Ideal scenario here would be whether we take the highs first or reject from here, come back into the lows for a long setup. Yeah, I mean this was an amazing long trigger. If you were awake for it, just coming through and wicking these lows. Even on the low time frames, there was quite a bit of time to find the long. It wasn't a straight down, straight up wick. We ran the lows, consolidated a little bit, even just longing a break of the consolidation or into a local retracement. We had a nice little local 618. One of the members in the Discord posted that it was their, I think he said it was his biggest, highest P&L trade he's ever had. Long into lows here. Yeah, somebody's saying, I think the 58K is irrelevant as it's the GP from the 50 to 47, 74K move? Absolutely. I mean, any of these fractals that I've already talked about, I'm not going to spend a bunch of time, like something like this would infer seeing a range, and that would look, might look like this, whether we make a new high or reject here, grinding into this level. So of course, coming and taking these lows. I mean, this is clearly just support, right? Any move down into these lows and price holding up, you have just a nice tight invalidation long setup. I mean, I can already tell you all of the trades I'm pretty likely to take. Depending on what happens. Pretty likely to take this trade if I get it. I'm quite likely to take this short if I get it. Price does push up here on the weekend. Going to take profits at the middle of the range, but hold some of it to the lows. So I'm not even saying the order that any of these levels have to come in, although something like this could be nice. And if we break down here, I'm probably going to be looking to take this long. Of course, we could rally and then come back to it, taking these lows and then sweeping these lows. On clean triggers, these are all trades I'd be willing to take. Call it 1, 2, 3 levels for longs, 1 primary level for a short. Is the stream better now? I'm just curious. Nice. We do have some pretty aggressive shorting coming in here. This is something worth keeping an eye out, or keeping an eye on. This starts to make some longs look a little more interesting, into some strength here. We have 5.2 million negative delta on an increase in open interest, so aggressive shorts coming in here, risk coming into the market. From a scalping perspective, putting on a bit of risk for some continuation up through the highs. Seems appealing. Just cutting if there's no follow through off that wick. But of course, if you don't know anything about risk management, trading, how to position, how to cut, or how to size your trades, you shouldn't be scalping or trading at all. So like something like this, like let's just say that you wanted to try to long into a bullish divergence as price is grinding up here. Well, you might size your trade something like this with your size for invalidation under the range lows. And so let's just say this equals a 1% loss on your trade if this happens. Well, you might cut your trade as a scalp locally. And so you might cut your trade for a 0.2R loss, right? What you don't want to be doing scalping, in my view, on ideas like this is trying to put a stop loss 0.1% away and taking a full loss on an idea like that. Just put on some size. That's reasonable. And just see if there's follow through up through the highs. And just cut the scalp if it's not working. A lot of people struggle with that idea of sizing. So like for example, let's just say price breaks out here. You can have some pretty nice size into trading off a bullish divergence here. Up into these highs, let's say. If there's a breakout, I'm just giving a hypothetical. Without taking on a lot of risk. You could take 3 or 4 losses on scalps like this that are the equivalent of 1 R of losses if you're sized reasonably. So we can just go to the order flow here. Yeah, the reason that this looks more interesting for a long is because of this, right? Some aggressive shorts coming in, some absorption, limit longs, risk coming into the market, CVD making the lower low, price making the higher low. But what would you want to see out of this? Well, you'd want to see some pretty immediate continuation. And so the idea there would be that you're either going to see continuation, the trade going in your favor, and if you don't, you can just cut and reevaluate. But you don't want to be taking, let's say, I'm going to just talk to you guys as if you understand these concepts, because most of you will be members in the Discord or traders, I imagine. So you understand the concept of 1 hour risk, and that might be 1 or 2% or 0.5%, depending on what your risk profile is. But instead of trading, so you're taking a full stop loss with a stop under this 5-minute candle, and you're sized like this. Say you're trading it to the highs of the range. You're going to get in a lot of trouble scalping very quickly unless you're incredibly precise and good. Taking full stops, like you lose 2% of your account on this, you lose 2% of your account on this, 2% of your account on this. So you can size like this, and cutting in here, cutting even at a retest here, around break even, slight loss. It's perfectly reasonable. But in theory, the reason that you would take a scalp long here from an order flow perspective is a big bullish divergence and all these shorts getting absorbed. If this is going to play out the way that you might expect it to, you should just start seeing continuation from this candle. And if you don't, then you're kind of invalidating the long setup there. So we'll see how this level plays out. A new 1 hour candle just opened. We're 30 minutes into the New York Open. Seeing some aggressive selling coming in here. Take a quick look. Some aggressive selling coming in on IBIT as well. Just locally. No aggressive buying. Somebody says, why does the continuation need to happen so quick? Well, it doesn't need to happen quick, but you're seeing in this 5-minute candle aggressive shorts getting absorbed, and now they're underwater. And so you'd like to see price stay above them and put some pressure on them and start squeezing them out. And you're getting positioned. Again, if you're scalping, we're talking low time frame ideas, right? So if you're in a low time frame idea, you want those trades to start working on a low time frame. If the trade's not working, you just cut it. But you can be scalping a lower time frame idea willing to hold on continued signs of strength and willing to cut it partial win if you don't get those signs of strength. But we can just see here, we're seeing aggressive selling into these candles getting absorbed. Prices making higher lows. So there's a bit of a battle going on here with aggressive sellers, limit buyers, risk coming into the market. Now the limit buyers might lose, right? So price could break down. And if price starts breaking down, you probably don't want to be in those in that long position. But yeah, typically in a scalping session, you're wanting to keep you're going to have lots of small losses, lots of break even, lots of small wins. Then you're looking to find yourself into a couple good positions. Just not wanting to take any big losses. Somebody says stream is glitching. I'm not going to take a look at altcoins right now. Ultimately, somebody saying, "Would you look at ton, please? I opened it long on the breakout, but underwater now. Do you think I should close it?" Well, I think you should always have a plan for your trade, right? And invalidation. I have no idea what your plan was. So we know where the buyers are, right? We're seeing that profile around this candle. So this is where price should be finding support. That's the level that you would expect to see defended. It's really important, though, not to get overly invested in your scalp setups. right, let's see if we can push up to the highs of the range or if we break down. Yeah, I'd be interested in along at 63,500 if we can push down there. Right now we have some selling coming into this little local rally here. The New York Open getting absorbed as of now. There's a limit buyer sitting here. We'll see if they hold up the level. Our GP of the move is right under this wick. Would be wanting to see that hold. Signs that this buyer is still here, pushing price higher. Maybe form a little uptrend. Fox D says risk management is real. I'll read the comment in a second. So this is the level you really don't want to see giving way. Want to see price holding up here. You can always reopen this, the long as well. Fox D says risk management is real. Last two trades covered all week of stop losses while hunting a long entry against strong bullish divergences. Thanks for this lessons. Yeah, absolutely. A little more risk coming into the market. Nothing too crazy here in volume and delta here. Yeah, so personally, I mean, I've cut my scalp. You need to see signs of strength there. Because that buyer is now underwater. And the aggressive seller is winning. There's no reason, in my view, to take a full stop. On a scalp. Look at order flow really quick. We almost do have a bullish divergence against the range lows, but for now this level's breaking down. So then here we would just see that we know there's a buyer here that hasn't been flushed out yet. We know there's some aggressive sellers that are slightly under or in profits. And so there's somebody with a long sitting here, presumably, that's slightly underwater, and there's some aggressive shorters here that are slightly in profits. So this is kind of an important level to say who's winning. Because if price goes much lower, then likely going to see this long just flushed right out of the of their position. Presumably with stops under these lows. This move through the range lows could come very quickly into that level below. So need to be watching that potential reaction. I'll flip over to the trading view chart if we start taking the range lows quickly. But most people don't have the order flow data, so I'm going to leave that up on the screen. The ideal scenario here would just be to see the lows taken. But we should just note that technically we're just at the lows of the range with a bit of a bullish divergence forming here. We'll see if these shorts start defending their position with limit selling, or if price comes up and moves above them. We have a pretty good sense for where the New York Open traders are positioned right now. Yeah, somebody's asking if the lows get taken and stops out the big long bidder, wouldn't that cause him to close longs and push the price down, I assume, even quicker or even further quickly? Yeah, you'd expect if these lows get taken, probably quite a few longs with stops under there. price to break through these lows quite quickly with high volume, high delta. But I'll say this, these lows are also being defended still. We can tell that by just across these lows. There's some aggressive selling getting absorbed here, which isn't surprising that you would see some absorption here in order flow, because we clearly have horizontal support here. So to know that there's somebody limit buying in this region shouldn't be surprising, or we wouldn't have lows put in here. Price moves up back above this level, then we have those aggressive shorts back underwater. But these local lows are being hammered on pretty heavily, but still defended. To give way, something like that obviously would be quite nice. Just going back and looking for an example to share. Where you can have a big bullish divergence form in a local range that ends up with a push to the upside without taking the range lows. So here's an okay example. So we're ranging here, and definitely some local lows here, but we see this big sell-off causing a bullish divergence locally right before this impulse to the upside. And so that would be where it might be interesting. It was only 4.1 million negative delta, but it was quite a relevant bullish divergence in the context of this range, where scalping into something like that can be really rewarding because you get positioned, and maybe your plan was to wait for these lows to get taken, but you see the big bullish divergence locally, and to try a scalp long can be rewarding if you do break out there. So that's kind of what you're trying to position for. If you're looking for, let me go all the way back here. This is a 5-minute chart. When you are looking for trades off of a bullish divergence forming higher. But we're so close to taking these lows now. This up here looked a little nicer than it does here. So we know there's a few levels down here. I mean, it is always something to watch out for, that price just wicks these lows. I'd like to see a move down lower. Somebody says, sorry, I'm new to the channel in crypto, so you would wait to be short in a short right now. I honestly, I'm not joking. You shouldn't be trading at all. You should just be paper trading. Take your time, a few months, build up some trading data. And you certainly shouldn't be trading ideas you don't understand. You know, I suggest everybody go pick yourself up a Mark Douglas book and the book Trading Wizards and understand the reality of trading, because you are just absolutely 100% without a doubt going to get destroyed if you're not actually taking proactive steps, learning concepts, and you're trying to copy trade people, trade ideas you don't understand, trade without risk management. Any experienced trader will tell you that it doesn't matter if you have an 80% win rate, you're the best trader in the world. If you don't understand how to manage your risk, you're just going to lose all your money. It's a mathematical certainty. It's the biggest and most important part of trading. I think I actually have a video going through all that math. I think it is on the public YouTube educational series. So lows are coming in here, and I'll be looking to take a long. Up into these highs, but I'm going to TP1 locally. If I get a trigger, we know our point of controls here. We have the middle of the range, and we have the 382 below. If we just nuke, then I'm looking for this level at 61,600. I'll throw these fibs on here just so we have them. Exact entry, we'll see. I'd like to see all these 1 minute wicks get taken. We need to look for potential reactions here. And maybe some chop chop. But the setup's going to look something like this. Not rushing into a position. $5.6 million negative delta here. Seeing that, presumably the log that came in up here getting stopped out. It's going to be a really important idea locally. Again, this is a region, middle of the range, POC 382, and very possible we just nuke straight to this level, in which case that's going to be a long. $8 million negative delta. Here, let me put you guys on order flow here. So we can see what's happening. Some of these local wicks about to get taken. So of course, I mean, it should go without saying that, say you wanted to long the range lows above, well, you wouldn't long them here because there's no reaction. The range is just breaking down. You're looking for a possible long trigger here, but there's no reason to take a long when price is just breaking straight down. Could always consider a reclaim of the range above. So for me, there's a couple scenarios I'll look at. I'll share really quickly. A reclaim back into this range. Need to be wary of this. Or lower. 7 million delta, 20 million volume. But in my view, no reason to be long yet. It does look like it could be quite nice though, this setup. If we get some strength from here. 9.5 million. 21 million volume. Yeah, so you'd be looking for a long trigger here, definitely. Not you, but me. Yeah, so reclaiming the range lows. It's quite a nice setup. Just want to see follow through now. And not this. Wasn't on the right screen. Yeah, so you'd want to see follow through. You'd want to see this hold up, this get reclaimed, and not reject from your horizontal, because we still have some untapped levels below. Came pretty close to the range low, but this could easily come. Sorry, the middle of the range. But right now, this is a high volume, high delta sweep of lows. Price starting to reclaim it. Want to see some strength here. Let's go over to order flow quickly. So yeah, we can see, I mean, big decrease in open interest, 9.5 million delta, lots of long stopped out. I mean, it's not quite a bullish divergence, but it could be considered bullish absorption relative to this low. We're almost making an equal low, but just signs that there are buyers here. The only thing you don't love about this, where this low came in, is that we have still two untapped levels pretty deep. So you definitely want to keep an eye out for another move down through these levels. If we can't reclaim this and hold up this. But typically with these reactions, you're wanting to see price move in your favor pretty quickly on the sweep and the reclaim of the range. It's a liquidity grab type move, right? So you want to see that liquidity tapped. If you don't get follow through, start looking for a potential breakdown. But no way to know what will happen. We'll just see. Somebody's saying, why are you using Bybit order flow and not Binance? Because I find it more reliable. Looking pretty good here. Just need to start claiming this level. Question is, do you take volume from TradingView into account when you're looking for the reclaim after a liquidation sweep? Are you talking about the volume in this candle? I'd say the volume in the candle is relevant for sure. But you're also just looking at volume in EXO as well, right? 21.5 million volume, 9.5 million negative delta. Price holding up the reclaim of the range so far. Of course, the ultimate goal here is to find a low time frame set up into a potential bigger move. Well, in some sense, you want to see high volume come in after the. It's not really important that the next 1 or 5 minute candle shows the high volume right after the sweep. But one of the things that you're looking to happen after a sweep like this to drive price up is, let's just say there's a bunch of people who are long in this range and they all just got stopped out. Well, you want to see signs that they're coming back into positions. And so the idea would be that, let's just say, let's say 20 traders, certainly more than that, just all got stopped out of their longs. And as price starts going higher up, higher and higher, you'd want to see all these traders pile back into their long positions at the same time, which can be a catalyst to drive price higher. But they might not jump into their position right away. I just like to look at structure, frankly. You know, is price holding reclaims? Is it rejecting, reclaiming? Let's have an initial reaction, high volume, high delta wick, with some levels below left untapped. Our point of control, our 382. But you definitely want to start seeing some momentum here. There's lots of different ways to manage positions. Somebody's saying, do you compound your profits, as in profits, put your profits back into your trades? I'm not sure on the best way to approach this. Like, does your margin size change often when putting on your trades? Well, you can compound your positions. You can compound your risk. I don't actually know what you're asking. Like, let's just create a fictional scenario. If I'm long from here, and maybe I have this as a swing long, I just trade separate setups. Maybe I'm taking this long setup separately from this long setup. I'm adding to a long position. Maybe I have short setup separately. But you're either adding risk or taking risk off of positions. Price just kind of chopping around here on the reclaim. A pretty tight 1 minute range. Not a lot of buying interest. After the 9.5 million negative delta here, we have 21.5 million volume. But here, 4.2 million, 3.1, 800K, pretty delta neutral. So no aggressive traders coming in short or long yet. Just a bunch of traders stopped out on this wick. There's a nice move. Yeah, so this would be a really an ideal situation. Nice high volume sweep, reclaim, hold up the lows, reclaiming this low. No sweating here. Volume still quite low. Some shorts getting stopped out. 2.5 million delta. argue there's a little descending trend line here that could be relevant. I don't see any reason not to lead towards price just moving up back through the highs of the range. Some brains is asking, do you think that Bitcoin is in hard mode right now? I don't know. There's a few things that can kind of just, it could either be awesome. Like, for example, I would have taken this long without hesitation had I been awake, and that would have been an incredibly easy mode trade. But being asleep during it, the triple bottom is kind of an annoying development in this range without taking any of these highs. It kind of depends. How you look at it. If this had happened in the New York Open when I was awake, I'd say, oh, it's easy mode. It happens when you're asleep. It's hard mode. Does what I see on Twitter have any impact on my trading? No. I do all my analysis without looking at Twitter, without even looking at the Discord. I'll often refresh my view every day. Just clear off the charts and see if anything else is worth looking at. See if I have a fresh perspective after new price action. I mean, obviously today, for example, the context of the chart from when I went to bed to now has changed dramatically. I think the cleanest ideas here, if we bounce from here, which we currently are, let's just clear off a bunch of levels. Prices come, I'm going to clear off this trend line too, and this range. Price with a strong impulse, we've come and taken this low, and we're kind of retesting the middle of this range. So if we call this a horizontal range, let me get rid of more stuff here. Let me make this really clean and aesthetic. Get rid of this. Get rid of this. It's kind of an SR flip, right? Retest this high, middle of the range. I see no reason to think that we couldn't head towards the highs of the range, which has a really nice interaction with this descending structure, the 618. The timing of that would be really nice as well for a short setup. So right now, price is just ranging and is bouncing off the middle of the range. If we start breaking down the middle of the range, we can't reclaim it, then probably this level. A follow-up question was if I'm compounding profits into trades. I guess saying like, do I trade with fixed size or do I always add to my account? Personally, I trade with fixed size, and every so often I increase the size that I trade. So I take my profits and I trade with a fixed size trading account. So the idea would be, say you had a $10,000 trading account and you grew it to, you made $5,000 profit. You would still trade a $10,000 account, and maybe down the road, you've made $5,000 off your $10,000 trading account. Maybe down the road you increase the size of your account, but you keep your size consistent. I think a lot of people could benefit from not just that, but say you start off paper trading. There's a really nice challenge that Mark Douglas suggests, and I think it's a good idea, which is plan on taking 25 trades and make your size so that if you lose all 25, you do not care. So maybe that's $1 for you. If you lose 25 straight trades, you're going to lose $25 or whatever that amount is. The idea being just focusing on execution, collecting some trading data, and not having an emotional attachment to your trades because of the money that's at risk. Lock in those 25 set of trades, make adjustments from there. And if you're feeling good about, I mean, at this point you're probably practicing some ideas. If you're feeling good about the results, you can just slowly start increasing your size while your edge is apparent. But of course, the majority of people are just going to put a shit ton of money at risk. They're never going to collect any trading data. They're not going to journal. They're not really going to learn even the basics. And they're going to get wrecked. And it's not a surprise. I mean, there's countless books from the best traders who have ever lived. They'll all tell you the same thing. But even so, just random people think they'll be the exception. I mean, this is quite straightforward locally, right? A range within a range. A little bit of a descending structure here. It would be kind of interesting to see, like I might just stay live here because presumably we'll start getting an impulse up higher, and it'll be interesting to see what happens here. If we see it, tons of shorts, tons of longs, shorts getting stopped out, longs opening, risk coming into the market. Right now, price is moving up quite nicely, still volume delta is very low. So we'll just take a look at how this move develops. Well, I mean, somebody says, what's your thoughts on Fed? Are you still trying to hit the Pico top short or nah? Well, I don't know if you watch my Pico short video, but in here, the Pico short was around here, $3.30, $3.28. I don't know if you've looked at the FET chart recently, but price dropped 55% from these highs. So I would say that, you know, we're a long ways from any type of Pico top short opportunity. We have a descending structure. Might come up and test here. Some alerts set across here. That was actually a really nice local sweep into the GP. That would have been quite a clean local long setup. Both of those books are great. Paper Money's asking, hey, can anyone help me find the right book? I can see Trading in the Zone by Mark Douglas. Another book is Market Wizards by Jack D. Schwager. I would recommend both. Market Wizards is interviews with some great traders, going through their story and their thoughts and their approach to the markets and trading. And Trading in the Zone is a trading psychology book. These meme lines are way too powerful on the low time frames. Considering, well, it's just funny because they get such clean reactions on these low time frames so consistently, regardless of what's happening. It seems like an order flow. You have a little bit of activity there, but it's just funny how cleanly those react. But so far, everything looks pretty good from a horizontal perspective. Swept the lows, reclaimed. We're reclaiming these lows. Yes, I am. This was the basic idea I was looking for earlier. To be fair, I did have the idea of shorting the highs too, and I didn't take it, which would have been nice. But middle of the range. So I just had marked it out, the confluence here. Middle of the range, retest of these highs. Taking some 1 minute candles. There's some levels below it as well. Maybe come up and sweep these highs first. But I mean, it looks pretty clean, I'd say. Retest these highs, middle of the range. Nice local lows to sweep. It's just a matter of if it holds. Would you take a long if it retests range lows, or does that show signs of weakness? since it didn't hold up the lows above it. I'm assuming you're just talking about this local range. I mean, yeah, I think if price, right now we're retesting this local low, but this would be a pretty normal idea. Sweep, retest, especially if there's a little bullish divergence in order flow here. That'd be the alternative scenario of getting long. If you didn't want to trade the actual level, if nothing looked clear here, you could wait for a break of this descending structure that would still be intact. So it might look something like this, for example. And you could use that as a trigger instead if this doesn't look very compelling. But just from a technical perspective, the retest is a perfectly reasonable place to enter. Yeah, I pull fibs from, someone asked, do you pull fibs from wick to wick? Yeah, I pull them high to low or low to high. Still need to watch for some of these levels. And of course, I mean, maybe I have a little bit of PTSD from retests of these lows, but maybe we just send it right back to the lows of the range for a quadruple bottom. No, I think this level would be quite interesting. If we break down. So ideal scenario here would be to just see a clean bounce on the retest. But we'll see. Worst case scenario, a really like come tap the point of control, break up out of this, come back into the 382, and then just nuke. If it all happens without any kind of bearish signals and order flow. Ideally, we get something like this. Hit a TP1. Maybe look for that head short up at the range highs. But let's see what happens here. Just at this local trend line above us, local retest. Nothing too crazy happening on the in order flow, except for the fact it's just low volume. It's a little bit of a bearish divergence forming here. That's all pretty low volume and low delta. Local trend line holding. What's with it? Sorry, this looks like the pretty close to the GP. I would say as long as price is trading inside the range, no reason to think there's not a range here. Do you want to actually re-pull this now though? Someone asking if, in my opinion, there are any trading books that stood the test of time and are still technically relevant. Well, obviously, I'm a big fan of Elliott Wave. I mean, I think Elliott Wave has certainly, in almost spectacular fashion, stood the test of time. Somebody breaking down every kind of possible structure in all assets 100 years ago, and that's still being highly relevant today is pretty incredible. Again, a little bit of bearish absorption happening here, but volume super low. It's nothing too interesting. ETH is also rejecting from its range highs around the 618 as well. Is sort of worth noting. Locally, very similar price action to Bitcoin, which is just a range. And would you look at that? Low descending trend line. So the charts locally are almost identical structurally. Tesla is pretty interesting here. Let's have an alert set up above, down below. No, I try not to sit in front of my computer all day and watch live price action. I prefer trading kind of medium time frame, higher time frame things around key sessions. And just set alerts. in some ways, you know, I could say that there's almost nothing, unless I'm scalping. Like sometimes I will scalp really low time frame price action. But there's almost nothing here that can happen that matters in the context of this trade. Like this candle coming down a bit, this candle going up a bit. Nothing that's happening here is going to change my perspective, because I have some risk on, and whether or not price breaks straight through this trend line or retest these lows doesn't really change the trade. This would be quite nice. So if we have a clean break out of these highs, it's a big if, of course. Probably the next trade I'm taking would be up at these highs at this descending structure, which would be a short. Back down towards this low. Just the middle of the range. For definitely a TP1, maybe look for the lower high. Could add back to my short if I want to. Maybe look to try this long. Maybe back down to the lows of the range. Just see how price is reacting at key levels. If we're breaking out of this structure, then I just hold my longs higher and not head short them. It's kind of funny, the halving's coming up. Certainly some volatility, but on these rallies, there's really been such low volume in these ranges. At the New York Open, we just took some major lows. Price is impulsing straight up from yesterday. But nobody seems so interested in Bitcoin right now. Maybe expect just a little bit more activity in the order flow. It feels like us in this live stream are the only people trading this market. Well, I might sign off on this live stream soon. Maybe we'll just see what happens here. You know, there's a good saying which well, it's not really a saying, it's a thing I'll say right now. You don't make any more money off your trades if you sit and stare at them. You know, as a trader, you get paid for planning out trades, putting on risk, just letting the trade play out. And so whether or not this trade works can't be changed by me sitting and staring at it. The actual trading part of trading is a very small part of your job. That's just clicking a button. And after you click the button, it's usually best just to let your stop loss do its job and protect you. But I'm kind of tempted just to see, because if just something interesting happens in order flow here, like something that it's not very likely, but something that either looks compelling as a bearish idea, like if we impulse through these range highs and there's some bearish stuff here, again, not very likely, or something really bullish, like maybe an impulse and a massive negative delta candle into this retest. And just so I can maybe point that out. Something out of the ordinary. But yeah, these low time frame trend lines are just so reactive. Something looks kind of right about this, though. Maybe I'm crazy, but here, let me just do this. This chart is so messy, it's kind of annoying me. But doesn't this look kind of like, assuming price interacts with this structure, doesn't this look kind of right? Like a nice setup for one of these impulsive moves. And of course, if we're going to tap that level when it intersects with the 618, that move needs to come quickly. Basically have a day. 20 hours, 24 hours. But frankly, if we can't break this descending structure, you start looking for some chop here. I am going to be setting an alert underneath here. The trend line almost looks like it's just cut straight through this price action. All right, well, I'm gonna stay live here for 5 more minutes. Yeah, someone says I don't know about the fourth bottom tap though. Yeah, I would say probably if that happens, it'd be like a choppier downtrend, and we'd probably break below with some consolidation into a move up. Take this wick low. Seems unlikely we just have another quick wick into it, but maybe. Something like this. I mean, this is kind of incredible how low the volume has been on Bitcoin, like in the New York Open here. I mean, the only reason we have high volume, high delta wick here is just because tons of positions got stopped out. But afterwards, like 75,000 delta, less than a million volume in this candle, 100,000 delta. All these really delta neutral candles, super low volume. After this move, and even at the highs here, volume just incredibly low. Delta incredibly low. Would have been nice to have like a much higher delta candle up at the highs. XRP and then a pretty choppy range here. Nice sweep of the lows. The highs still holding. FET looks ready to break through these highs. Maybe come up and test this trend line. ETH about to break out of this trend line or reject from it. ETH is much less likely to, in my experience, to fake trend lines out. Bitcoin a little more likely. Some ETH hold up above this. Be interesting. All right, well, we're right at the trend line here, so just want to see what kind of volume and liquidity comes in here. If there's not something super interesting that happens immediately, just gonna end the live stream. Just trying to kind of wick through it. Someone asking any reviews on Doge. Well, Doge stopped me out at break even. Had a really nice move yesterday. I mean, this is a very similar setup to the setup I'm in, just on a different time frame. Coming in, sweeping these lows right into the 618. Got like a 5% move into this descending trend line. I got taken out after my TP1. Doge just kind of ranging. I mean, everything is going to look similar in terms of structure. It is kind of funny because you sometimes wonder if people do check like how much charting they do. Because say you could go over like ETH here, Bitcoin, Doge. All the charts are very similar and they're all quite correlated, right? Not always, but I mean Doge is in a range. For the same reasons that you might have been interested in this setup on Bitcoin, you might have been planning for this setup on Doge or this setup on ETH. And so the point being that, you know, somebody, when price action looks like this, I could say like, hey, I'm interested in a long if we can come and sweep these range lows on Bitcoin. Someone will say, well, what about Doge? It's like, well, Doge is also in a range. It'd be kind of interesting to come and sweep those lows. And what about ETH? It's all just the same setup, basically, right? All the structures are the same. I'm sure we could pull up a dozen alts and find essentially the same thing. Some obviously stronger than others, like Sol. Already retested its range high here, but at the time, same thing. Choppy range, the setup, sweep long, the sweep at the range low, big impulse. Already had arguably at least a local short trigger into the range high, TP1 range, the midline of the range. All right, I might end the live stream here. This is getting, not only are we watching live price action, but we're watching live ranging price action, which is a double. Oh, here we go, we're breaking out. But here Sol has a lot of relative strength locally. Sol also in a bigger range.